Let me tell you a story that changed the way I think about money. A guy, just like you and me, took $500 and put it all into one stock, Tesla. He checked it obsessively, every morning, every lunch break, every night before bed. And then it happened. 500 became 5,000. 5,000 became 50,000. He told everyone, his friends, his family, he felt invincible. But here's the part nobody talks about. For every one person who turned 500 into 50,000, there are literally 1,000 people who lost everything trying. They picked the perfect stock, did all the research, felt so confident. Then the company disappointed. The industry shifted, bad news hit, and their money, gone. So what if I told you you don't need to find the needle? What if I told you you just need to own the whole haystack? Let's talk about the dream first, because that dream is real, and the appeal is powerful. When you pick an individual stock, let's say Apple or Tesla, you're essentially putting all your chips on one player in the championship game. If that player wins big, you win huge. The upside is intoxicating. You're not just getting 8% returns. You could get 80%, 800%, life-changing money. That's why people do it. That's why it's so seductive. But here's what happens next. You own 2, 3, maybe 5 individual stocks now, and suddenly you can't stop checking your phone. You're in a meeting thinking about earnings reports. You're at dinner thinking about whether you should have sold yesterday. You're losing sleep wondering if you made the right call. This is what I call the FOMO stress cycle. You're terrified of missing the next big winner, so you're constantly researching, constantly second-guessing, constantly checking if you should buy or sell. And even worse, studies show that people who actively trade individual stocks make worse returns than people who just hold them. The stress literally costs you money. You're not sleeping, you're not present with your family, and statistically, you're probably underperforming anyway. Is that really freedom? Now let me show you the alternative, the thing that quietly builds more wealth than any individual stock ever will. It's called an index fund, and honestly, it's almost boring, which is exactly why it works. Here's the simple version. An index fund is like a basket, but instead of holding 10 or 20 stocks, it holds hundreds. The most popular one? The S&P 500. That's 500 of the biggest, most stable companies in America. Apple, Microsoft, Amazon, Johnson & Johnson, Coca-Cola. You get all of them in one fund. So here's the magic. If one company fails, if it tanks completely, you have 499 others holding you up. That's not a gamble, that's a strategy. And here's what happens when you own an index fund. You invest your money, maybe $100 a month, maybe $500 a month, whatever you can afford, and then you forget about it. You're not checking your phone obsessively, you're not losing sleep, you're not refreshing your brokerage app during lunch. Instead, you're living your life. You're at your kid's soccer game, actually present, not thinking about stock prices. You're on vacation, truly relaxing, not checking your portfolio. You're working your 9 to 5, building your career, building other skills, building your actual life. And while you're doing all that, your money is quietly, consistently growing. The S&P 500 has averaged about 10% returns annually over the past 100 years. That doesn't sound incredible, but over decades, that's generational wealth. $500 invested today at 10% annual returns becomes $8,000 in 20 years, $1,000 becomes $16,000, and you literally did nothing. This is the strategy that builds real wealth for real people, not lucky guesses, not perfect timing, just consistency, compound interest, and time. Let me give you a real comparison. Picking individual stocks, it's like making a 5-course meal from scratch. You need perfect timing, perfect ingredients, perfect execution. One thing goes wrong, the sauce breaks, the timing is off, and the whole thing fails. It requires constant attention, constant skill, constant perfection. Index funds? They're a slow cooker. You throw everything in, set the temperature, walk away for 8 hours, for weeks, for years, and it just gets better. You come back and it's perfect. No stress, no mistakes, just results. Now here's something that might surprise you. Even professional fund managers, people whose entire job is picking winning stocks, fail to consistently beat the S&P 500. We're talking about Ivy League graduates, people with decades of experience, people who are literally paid millions to beat the market. So if the experts struggle to consistently win, why would you put that pressure on yourself? Why would you spend hours researching when the professionals can't even beat a simple index fund? The research is clear. The average individual investor underperforms index funds by about 3 to 4% per year. That might not sound like much, but over 30 years, that's the difference between retiring at 55 or retiring at 70. It's literally decades of freedom. So what should you actually do? Here's my honest recommendation. It's not one or the other. It's both. Put 90% of your investing money into index funds. The S&P 500, maybe some international index funds. Diversify safely. Build real wealth. Then take the other 10%, let's call it your learning fund, and pick individual stocks if you want. Why? Because picking individual stocks is genuinely fun. It's educational. You'll learn a ton about how companies work, how markets work, how your own psychology works. And if you lose that 10%, it hurts a little, but it doesn't destroy your future. You get the upside of potentially beating the market, but 90% of your wealth is already on solid ground. It's the best of both worlds. Here's your action plan. Step 1. Open a brokerage account. Vanguard, Fidelity, Charles Schwab. Any of these work great for beginners. Step 2. Set up automatic monthly investments. Even $50 a month matters. Set it and forget it. Step 3. Pick a broad index fund. S&P 500 is the classic choice. VTI or VOO are great options. Step 4. If you want to have fun learning, pick 1 or 2 individual stocks. Research them, learn, enjoy the process. But don't let that 10% distract you from the 90%. Here's what I want you to understand at your core. Wealth isn't about being a genius. It's not about timing the market perfectly. It's not about finding the next Tesla before anyone else. Wealth is about being consistent. It's about investing $100 a month for 30 years instead of trying to make $10,000 in 30 seconds. It's about sleeping well at night. It's about being present with the people you love. It's about working your job, building your skills, enjoying your life, while your money quietly works for you in the background. That's not boring. That's powerful. That's how ordinary people build extraordinary wealth. And the beautiful part? It's available to you. Right now. Today. You don't need to be smart. You don't need to be wealthy already. You don't need insider connections. You just need to start. If this resonated with you, if you're ready to stop playing the stock picking game and start building real wealth, I want to invite you to join our community. Subscribe to this channel. We're building a movement of people just like you. Ordinary workers. People with big dreams and realistic timelines. Hit that bell so you don't miss anything. And leave a comment below. Tell me, are you a stock picker or an index fund believer? What's been your experience? I read every single comment, and I genuinely want to hear from you. Your future self is watching this video right now, and they're grateful you're taking this seriously. They're grateful you're thinking about building wealth now instead of wishing you had started years ago. So, start today. Open that brokerage account. Make that first investment, even if it's just $50, because that $50 today could become $400 in 20 years. And that's not luck. That's the power of compound interest. That's the power of consistency. That's the power of owning the haystack instead of chasing the needle. Welcome to your investing journey. I'll see you next.